Hey everyone, welcome back to Corporate Decoder, the place where we break down the financial secrets that move the market. And today we're diving into Fulgent Genetics and their latest report, which might just unlock some genetic code for their future performance. Before we jump in, make sure you're subscribed because we're always digging into the filings that matter, and join our Discord community linked in the description for more real-time insights. Alright, so Fulgent Genetics just dropped a report on August 1st, 2025, and it's giving us a peek behind the curtain at how they're doing. Think of this like getting a fresh health check for the company, and we want to see if it's got a strong pulse or if it's feeling a bit under the weather. Fulgent Genetics is a company you probably know for its genetic testing services. They're in a growing field, but also one that's pretty competitive with a lot of moving parts. Knowing how they're performing financially is key to understanding where they're headed. Their stock ticker is FLBK, and it trades on the Nasdaq Global Market. This tells us they're a publicly traded company, and these reports are how they communicate their vital signs to us investors. The main news here is that Fulgent Genetics released their financial results for the quarter ended on June 30th, 2025. This is the juicy part, the numbers that tell the real story. They've attached a press release with all these details, and that's what we're here to decode. They also mentioned they updated their investor presentation. Companies often do this to highlight positive developments or set the narrative for their performance. Think of it as their way of putting their best foot forward. Now, this part is a bit of legal jazz. They're saying that the information they're providing, mainly the press release and presentation, is being furnished, not filed. What that basically means is they're sharing it, but they're not making themselves legally liable for it in the same way as a formal filing. It's a bit like saying, here's the info, but don't sue us if something changes. It's common practice, and it's important to know the difference, but for us it means we're looking at their own account of their performance. So the real meat of the report is in Exhibit 99.1, their press release. This is where they announce their earnings for the quarter. We're looking for key numbers like revenue, profit, and any guidance they give about the future. Are they growing? Are they shrinking? How are their costs looking? These are the questions we want answered. Then there's Exhibit 99.2, the corporate presentation. This is visual storytelling. It's usually packed with charts and key performance indicators that they want to emphasize. We'll look at this to see what they're proud of and what story they're trying to tell us about their business. And the report is signed off by Paul Kim, their Chief Financial Officer. This is the person ultimately responsible for the numbers and represents the company's official word on their financial health. Now let's get to the good stuff, the financials. Without seeing the actual numbers from the press release or presentation, we have to infer what kind of information would be in there. Typically, they'd report revenue, gross profit, operating expenses, net income, and earnings per share. For a genetic testing company like Fulgent Genetics, revenue could come from various sources like diagnostic tests, oncology testing, or even services related to infectious diseases. In the quarter ending June 30, 2025, we'd be keen to see if their revenue has increased or decreased compared to the previous quarter or the same quarter last year. For example, that means for every $10 they made last year. For example, if revenue is up 10%. That means for every $10 they made last year, now making $11 this year. That's a good sign of growth. If it's down, say, 10%, it means for every $10 they made last year, they're now making $11 this year. That's a good sign of growth. If it's down, say, 10%, it means for every $10 they made last year. For example, say 10%, it means for every $10 they made. They're now only making $9, which would be a concern. We'd also look at their gross profit. This is revenue minus the cost of goods sold. For a biotech company, the cost of goods sold would include things like lab supplies, kits, and personnel directly involved in running the tests. A healthy gross profit margin tells us they're efficient in delivering their core services. A margin that's shrinking might indicate rising costs or that they're having to lower prices to compete. Operating expenses are also crucial. This includes research and development, which is vital in a science-driven field to stay ahead, sales and marketing to reach customers, and general and administrative costs for running the business. If these expenses are growing faster than revenue, then their profitability can suffer. And of course, the bottom line, net income. This is what's left after all expenses and taxes. If net income is positive and growing, that's great. If it's negative or shrinking, it signals potential trouble. Warren Buffett always says to look at a company's ability to generate free cash flow. That's the cash left over after all operating expenses and capital expenditures. This cash can be used to pay down debt, reinvest in the business, or return to shareholders through dividends or stock buybacks. A company that consistently generates strong free cash flow is generally a healthy one. In the context of Fulgent Genetics, the competitive landscape is fierce. There are many players in the genetic testing space, from large established labs to smaller specialized companies. They also face regulatory hurdles and the need for continuous innovation to offer new and improved tests. So their financial performance needs to be seen against this backdrop. For instance, if they mention a significant increase in revenue, but also a huge jump in marketing spend, it might mean they're spending a lot to acquire new customers, and we'd need to see if that customer acquisition is sustainable and profitable in the long run. If they report strong earnings, but their cash flow isn't keeping pace, it might suggest that their reported profits aren't translating into actual cash in the bank. What's also important for Fulgent is their pipeline of new tests and their ability to adapt to changes in the healthcare landscape, like new government policies or advancements in genomic technology. Their financial statements should ideally reflect progress in these areas, either through increased R&D spending or successful product launches that are driving revenue. Looking at this filing, we're trying to see the story. Is Fulgent Genetics effectively capitalizing on the growing demand for genetic insights? Are they managing their costs well, and are they investing wisely in their future? The numbers in that press release and presentation will tell us whether they're a company that's truly unlocking value or just going through the motions. Now, looking at these results more broadly, Fulgent Genetics appears to be navigating a dynamic genetic testing market. Their continued reporting suggests stability and an ongoing commitment to transparency with investors. However, without the specific figures from their August 1st release, it's hard to pinpoint exact performance trends. If their revenue saw a substantial increase, it would indicate successful market penetration or the launch of popular new tests. Conversely, a decline might signal intense competition or challenges in particular service areas. A notable risk for companies like Fulgent is the rapid pace of technological advancement. What's cutting edge today can be standard or even outdated tomorrow. This means they must consistently invest in research and development to stay competitive. If their R&D spending is falling behind industry peers, it could be a long-term concern. Another opportunity lies in expanding into new geographic markets or developing more personalized medicine solutions which are gaining traction. In terms of a clear conclusion based on this filing alone, it's premature. This report on August 1st is a snapshot. We need to see the actual numbers from their October earnings report or future quarterly filings to establish concrete trends and a solid assessment of their direction. However, the mere act of providing regular updates like this is a positive sign of corporate governance. Alright, that's our quick dive into the Fulgent Genetics filing. What's your take on the importance of these regular updates, and what do you think are the biggest challenges for genetic testing companies today? Drop your thoughts in the comments below, and if this breakdown was helpful, smash that like button and subscribe for more in-depth financial analysis. And don't forget to join our Discord community, linked in the description, for more exclusive content. Thanks for watching, and we'll see you in the next Decode.